In this recording, I'm going to be taking you through the pre-released information for the Level 4 practice assessments for PDSY, and this is going to cover both Practice Assessment 1 and Practice Assessment 2. So first of all, we're going to have a bit of a look at about the company background and the history. So the short paragraph paints a picture of a well-established and influential company operating at the forefront of the electronic industry, with significant manufacturing capabilities and a global customer base for their sophisticated products. This paragraph reveals the structured business model where SLP leverages its manufacturing capabilities and strategically expands its offering through third-party partnerships to provide a more comprehensive suite of products to its customers in the advanced technological markets. This hybrid approach can enhance their market position and customer relations. This next part describes the geographical concentrated operational structure for SLP in Manchester. This setup likely aims to enhance internal communication, streamline logistics with manufacturing, warehousing and sales, and leverage the infrastructure and resources available in an industrial estate setting with a region with a relevant industry base. While offering benefits in terms of coordination and control, it also means the company's core operations are geographical depending on a single location. With SLP being established 10 years ago, it's likely moved beyond its initial startup phase and has attracted external capital, potential to scale its operations, invest in further innovation, or expand its market reach. The loss of control and interest by the founders could signal a new era for the company with different priorities and potentially a more corporate structure. It would be interesting to know who the new major shareholders are, as this could provide further insight into SLP's future direction. This industry often involves significant R&D investments, complex supply chains, global operations, and rapid technological obsolescence, of which demand financial management. Louise Hardin's appointment likely aims to provide SLP with the financial expertise needed to navigate through these complexities, supports its continued growth, and maintain its position as a market leader. It reflects a maturing of the company structure and a commitment to professional management. While revenue growth is positive, the declining profitability trend needs to be addressed to ensure the long-term sustainability and attractiveness of the business to investors, especially given the early information about the change in shareholding. Louise Hardin, the newly appointed finance director, will likely play a crucial role in analysing these trends, identifying the root cause of the declining profitability, and implementing strategies to improve operational efficiencies and financial performance. Understanding these specific market segments SLP operates in and the competitive landscape would provide further context for this situation. By acquiring a company with complementary and potential high-margin patent products, SLP aims to leverage synergies, expanding its market reach, and ultimately improve its financial performance. The initial accounts for Merville will be crucial in determining the success of this strategy and informing SLP's future decisions regarding integration and further investment. The unapproved management bonus underscores a performance-driven approach to the acquisition. Let's now move on to developments in the market. The industry is already characterised by rapid technological change and tight margins. A recessionary environment coupled with strong international competition can put considerable pressure on companies to innovate faster, reduce costs, and find new ways to differentiate themselves. SLP's previous strategy of acquiring Merville Limited to improve profitability now appears even more critical in the face of these challenging market conditions. The company needs to carefully navigate this environment by focusing on its unique selling propositions, optimizing its cost structure, and potentially exploring new markets or product areas less susceptible to these intense price competitions. The strength of the pound is a microeconomic factor, largely outside of SLP's control, further emphasizing the need for strategic agility. The acquisition of Merville Limited, with its unique patented products, could be one such strategic move to regain a technological edge in specific areas. However, SLP will likely need a broader and more sustained strategy to address the fundamental challenge of competing on innovation with companies that have significant larger R&D budgets. By downsizing, this allows them to remain competitive by leveraging external innovation. The reluctant downsizing suggests a necessary streamlining of existing operations to free up resources for those strategic acquisitions and to improve overall efficiencies. This indicates a pivot in SLP's growth strategy, moving from primarily organic growth to the more hybrid model that incorporates inorganic expansion through acquisitions. The success of this strategy will depend on SLP's ability to identify and integrate suitable acquisition targets effectively. Now let's look at SLP's strategic planning and control. Solely focusing on financial results can be short-sighted in an industry where innovation, customer relationships, and operational excellence are critical for sustained success. By monitoring performance across these different dimensions, SLP can gain a more leading-edge view of its strategic health and make more informed decisions to address the challenges they face, for example, competition and R&D limitations. They can also capitalize on opportunities. So the review after the first year is a crucial part of the continuous improvement process for their strategic controlled framework. After reviewing Perspective 1, we can see that this is a positive outcome in the learning and growth perspective, which suggests that Louise Hardin's emphasis on a broader view of organisational capabilities is paying off and could be the key factor in SLP's ability to navigate the competitive landscape despite its limitations in R&D spending. It highlights the importance of investing in people as a strategic differentiator. This industry demands high level of efficiency, quality and responsiveness to rapid technological changes and evolving customer demands. If SLP's internal processes are not optimized to support innovation and deliver cutting-edge products that meet customer needs, their market position will continue to erode. This poor performance in the internal business process perspective likely reinforces the director's concerns about the company's future and the need for strategic intervention, like targeted acquisitions and potential downsizing. Addressing these internal inefficiencies and improving these processes that drive product development, manufacturing, and delivery will be critical for SLP to regain its competitive edge and improve overall profitability. Louise Hardin and the line managers will likely need to analyse these process measures in detail to identify the root causes of the poor performance and implement corrective action. The fourth perspective is the final perspective, which looks at the financial data. This acts as the final confirmation and the ultimate measure of the success of SLP strategic initiatives. With the financial results continuing to show falling profits, this gives us an insight from the other perspectives that provide the crucial context for understanding and acting upon the financial data. Now, the third perspective looks at the customer's view of the business. This perspective underscores that while internal operational efficiencies and financial performance are important, ultimately, sustained success depends on meeting and exceeding customer expectations with relevant and cutting-edge products and services. The feedback on older products serves a warning sign that needs to be addressed urgently. Although increasingly customers are generally satisfied with the brought-in products being sold by the sales division than those manufactured by SLP themselves. Now looking at strategic mapping. By using the first year's balance scorecard results to build a strategy map, SLP is taking a proactive step towards better communicating its strategy, aligning its efforts, and ultimately improving its performance in the competitive advanced technological electronics market. The cause and effect relationship depicted in the map will be crucial for guiding their strategic decisions and ensuring that their actions are focused on achieving their desired outcomes. This next paragraph, this described flow within the strategy map, which provides a clear narrative of how SLP intends to create value and achieve its strategic goals. It emphasises a long-term perspective where investments in intangible assets drive improvement in operational efficiencies and customer value, which in turn translates into tangible financial benefits. This interconnectedness highlights the importance of an holistic approach to strategy execution, while progress in one area supports and reinforces progress in another. Overall, the proposed strategy represents a significant shift towards prioritising innovation as a means to overcome SLP's current challenges and achieve long-term profitability in the advanced technological electronics market. Its success will hinge on effective execution and a deep understanding of market demands. This internal debate underscores the complexity of strategic decision-making, especially when a company is facing multiple challenges in a dynamic and competitive industry like advanced technological electronics. Louise Harding's role in addressing the concerns about internal controls and potentially finding efficiencies to free up resources for strategic initiatives will be critical in navigating these conflicting viewpoints. The directors will need to carefully weigh the potential long-term benefits of increased R&D against the more immediate need to address fundamental operational and financial weaknesses. For SLP to move forward effectively, the board will need to find a way to bridge these divides, weigh the competing arguments, and forge a consensus on a clear and coherent strategic path. This might involve further analysis of the root cause of the company's problems, a realistic assessment on its financial capabilities, and a careful consideration of the long-term implications of different strategic options in the context of the advanced technological electronics market. Strong leadership and effective communications will be crucial in navigating this period of uncertainty. Now below is a list of SLP's key personnel, and it'd be worth taking your time to familiarise yourself with the individuals and the roles they play. And finally, we're going to be looking at SLP's financial statements. So while a turnover of £20 million suggests a significant presence, the profit after tax is £960,000, which needs further context to determine its strength and whether it aligns with the company's market-leading position. The exclusion of Merville's results means that the financial implications of the board's chosen strategy to address declining profitability are still unknown and will be the key area to watch in future financial reports. The board's uncertainty about the best way forward likely precedes the actual financial integration and performance data from the Merville acquisition. Now let's go through and analyse each of the financial statements, starting with the profit and loss. So as we can see, we've got a revenue here of £20 million, and this confirms the significant turnover we noted earlier. However, in isolation, it doesn't tell the full story about the health of the revenue generation. We need to consider the trend, growth or decline from previous years, and the volume of goods sold to understand if the revenue is sustainable. The cost of sales is just over £14 million, which represents the direct cost associated with producing the £20 million in revenue, and the relationship between the cost of sales and revenue gives us the gross profit of just over £5.5 million. The gross profit margin of 28.39% is a crucial indicator. We need to benchmark this against the typical gross profit margins in the advanced technological electronics industry. A lower than average margin could indicate pricing pressures from overseas competition, high input costs, or inefficiencies in the cost of production. Given the earlier mention of intense competition and falling market prices, this margin might already be compressed. The operational profit margin of just under £4.4 million represents the cost incurred in running the business, excluding the direct cost of sales. This would include administration expenses, sales and marketing costs, and importantly, research and development expenditure. The size of this figure relative to the gross profit is significant. This leads to the profit from operation as being £1.2 million, and the operating profit margin is 6.33%, which is concerning, especially for a company that was once a market leader in advanced technological electronics. This low margin confirms the earlier statement that profits from operations have fallen in recent years, and it suggests that the operating expenses are consuming a large portion of the gross profit, leaving a relatively small amount for the core business activities. This could be due to insufficient cost control, high R&D expenditure that isn't yet translated into profitable new products, or inefficiencies in sales and marketing. The £47,000 represents the cost of borrowings for SLP, for example interest payments on loans. It's a relatively small figure in the context of the overall financials, leaving the profit before tax as being just over £1.2 million, with the tax expense for the period being £258,000, leaving the profit for the period from continuing operations as £960,000. This gives us a net profit margin of 4.8%, which is also quite low for a company in advanced technology sector. It indicates that after all expenses and taxes, only a small percentage of the revenue translates into profits for the shareholders. So as an overview, for 2000X1, the financial results paint a picture of a company with significant revenue but struggles profitability. The low operating and net profit margins, coupled with the qualitative information about increasing competition and a loss of technological lead, suggests that urgent action is needed. The acquisition of Merville Limited represents a strategic attempt to address these issues, but its success remains to be seen. The board needs to overcome the current division and develop a cohesive strategy focused on cost controls, targeted R&D investments, improving gross margins, and effectively integrating new acquisitions to drive sustainable and profitable growth in the competitive advanced technological electronic markets. Now let's move down onto the financial position of the business. And first up, we can see there's a non-current asset for the PPE being 4.3 million. This represents SLP's investment in its long-term operational assets, such as the manufacturing plant in Manchester. The value seems reasonable given the manufacturing activities, and we should consider the age and condition of these assets and any planned capital expenditure for upgrades or replacements, especially in the technological advancing industry. The inventory is just over 3.6 million, and this is a significant portion of current assets. In the advanced technological electronics industry, high inventory levels can be risky due to rapid obsolescence. So we need to understand the nature of the inventory, raw materials, work in progress, and finished goods, and the inventory turnover ratio to assess its efficiency. A high level of finished goods inventory might indicate slow sales of certain product lines, potentially the older ones as we discussed. With the trade receivables being just under £3 million, this represents money owed to SLP by its customers, and we should analyse the aging of the receivables to ensure timely collection and identify any potential bad debts. A high number of overdue receivables could strain the cash flow. With only having £8,000 in the cash and cash equivalent, this is a very low cash balance for a company with £20 million in revenue. It suggests potential cash flow management issues, or that most cash is quickly reinvested or used to cover liabilities. The low bank balance makes the reliance on the bank overdraft more concerning. This leads the total asset value of just under £11 million, and this is the total value of everything SLP owns. Now moving on to equity and liability, combined in the original share capital and the share premium of 1.96 million, both these figures represent the capital invested by the shareholders. With the retained earnings being just over £4 million, this is the accumulative profit of the company that has been reinvested rather than distributed as dividends. The fact that this figure is positive suggests some historical profitability, although we know recent profits have declined, leaving the total equity, which represents the owner's stake in the company, as just over £6 million. We've got a bank loan for just over 1 million, which is the long-term debt obligation, and we should understand the terms of the loan for the interest rates and the repayment schedules and how it impacts SLP's financial flexibility. Looking then at the trade payables, this is the money owed by SLP to its suppliers, and the level should be reasonable in relation to the cost of sales and the credit terms obtained. We've got a bank overdraft of 124,000, and this is the short-term borrowing facilities used to cover day-to-day cash flow needs. The fact that SLP is utilising an overdraft, coupled with the very low cash balance, reinforces concerns about short-term liquidity. And the 219,000 is the amount owed by SLP for tax. The total liabilities of just under 5 million is the total amount of money SLP owes to external parties, leaving the total equity and liability balance of 10.928 million, which is the balance that matches the total assets. So having an overview of the statement of financial position, it reveals potential weaknesses in liquidity and working capital management, particularly the very low cash balance and reliance on an overdraft, alongside significant inventory and receivables. While the equity position appears reasonable, the level of liabilities warrants careful monitoring, Addressing these financial stability issues should be a priority for the board, alongside the strategic considerations regarding research and development and profitability. Improving cash flows and optimising the balance sheet will provide a stronger foundation for future growth and strategic initiatives, including the integration of Merville Limited. Now, please take your time to familiarise yourself with this pre-scene. You will not be allowed to take a noted copy into the exam. However, you will be provided with an online screen version of this company background and information throughout your assessment.